Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Asian shares trim gains as Chinese markets return from the Lunar New Year holiday to face a trade war with the world's biggest economy. In Japan, Nikkei reports that Honda and Nissan have dropped their plans for a tie-up. Alphabet slumps post-market on slowing growth in its cloud business. Chipmaker AMD also slides on a disappointing outlook for its data center division. And President Trump proposes the US takes over and rebuilds Gaza, relocating Palestinians to other countries, provoking criticism and concern in the Middle East. Happy Wednesday. So the rally that we saw in tech shares yesterday on the Nasdaq 100 looks set to be short-lived, with futures pointing lower on that metric. Alphabet and AMD, and the misses there, the disappointment certainly in focus. You also saw gains yesterday on European stocks, but currently you're looking at losses of 0.5%. The read across, of course, around China. The mainland markets reopening after the Lunar New Year. The two countries, US and China, now in that trade war Mark II with those 10% tariffs and Beijing retaliating. FTSE 100 futures here in the UK pointing lower by 0.3%. S&P futures then, after notching gains yesterday, currently pointing lower by 0.5%. Nasdaq 100 futures off by 130 points. Again, Alphabet and AMD will be the drags there, pointing lower currently by 0.6%. Let's flip the board and have a look cross-asset then. Treasuries relatively stable so far in the session. Your benchmark US 10-year yielding you 4.50. Not a lot of movement there. The movement, though, is there for the Japanese yen, and we'll unpack that story for you. But broadly, this is a story of higher wages and expectations building that the BOJ has space to go again with another hike, possibly as soon as June. 153 right now, and the Japanese yen up 0.6%. Brent at $76 a barrel, down around 0.2%. Gold at a record, a fresh record. This is a safe haven play. Gold up 0.6% in the session today, up around 40% in the last 12 months, 2,858 per troy ounce. Let's cross over to Singapore right now. Avraham standing by with a check on the Asian markets, with autos and the yen in focus. Avraham.
Yeah, I'll get to what we're seeing in Japan, but also checking in on mainland markets. They're back from the long holiday. We've been watching to see how they would open today, and indeed a lot has been happening while markets were shut. We had a trade war erupting. We saw the DeepSeek narrative taking hold. So today, despite some gains in the early goings, we saw the stocks in the mainland sinking amid these tariff concerns, and then the sentiment taking a hit as well from the U.S. Postal Service suspension. So losses on the CSI 300 and on the Hang Seng, dragging down the mood in the broader Asia region. That gauge has also erased earlier gains. Offshore yuan, onshore yuan, we're seeing weakness as well. This is the first day back for the onshore currency. Now, this is on a day where the yen is the top gainer. Actually, most Asia currencies are gaining ground. That's sapping a bit of the Nikkei's earlier strength. This is against the backdrop of a strong inflation outlook. You alluded to this a short while ago, but in the past 20 minutes or so, flip the board, I wanted to highlight the focus has been this report that Honda and Nissan are dropping their integration plan. And this deal was always seen as a sort of bailout for Nissan. So when you look at the reaction, pretty clear. Honda revving up, Nissan dropping, deceleration here before I think trading was suspended on the stock. So this is what we're seeing in Asia for now. Tom.
Avraham, thank you very much indeed. A busy session over in Asia with, of course, mainland China coming back after that Lunar New Year holiday, and the focus again on Japan around autos and the yen. Avril, thank you. On the earnings story, it's a big day in terms of earnings. We have Novo Nordisk later today. We have Vestas, but right now, Crédit Agricole, the French lender, coming in with a beat in the fourth quarter. Net income at 1.69 billion euros, above the estimates of 1.41 billion. The asset management part of this business performing well. Potentially a fly in the ointment, though, for this lender is a loan loss provision number coming in at 594 million euros. That is above the estimates. That's on loan loss provisions. So that looks like a challenge for Crédit Agricole. But the top line, it's a pretty decent beat in the fourth quarter in terms of net income. Also a beat on revenue, 7.09 billion euros versus estimates of 6.5 6 billion. Full year dividend per share, €1.10. The estimates had been for just over €1. We're going to be speaking exclusively with the CEO of Crédit Agricole, the Deputy CEO, Jérôme Grivet. That's at 7:30 a.m. UK time, so tune in for that conversation. Now, the first shots of a US-China trade war are sapping sentiment on the markets. For more, let's bring in Bloomberg M-Live strategist Mark Cranfield. Mark, give us the deep dive in terms of the market reaction in mainland China on the reopening after that Lunar New Year holiday to this second round in terms of the trade war with the US.
Well, as Averill was saying, on the surface, it looks as though Chinese equities are not doing that great. If you look at the major indices, CSI 300, Shanghai Composite, a little bit down today. They've been very choppy all day. Under the hood, it's a very different story. It is becoming a stock picker's market. So there are very good gains for software developers, particularly those in the artificial intelligence space, people benefiting from the DeepSeek narrative. There's also gains for certain metal companies like tungsten-related companies because China's going to put some tariffs on the US in that sector. Then you've got the e-commerce sector not doing very well because US Postal have put some restrictions on packages coming from Hong Kong and China into the United States. It looks as though with amid the fog of all the tariff situations between the US and China, what stays, what doesn't stay, it looks as though investors are becoming very selective. Stock pickers are having a field day, and it looks as though they will stay that way for some time as we await whether we get more stimulus or not from China, whether there's lower interest rates from the PBOC. It may well continue. We get choppy trading on the indices level, but under the radar, there's a lot more going on, and people are clearly benefiting. The software factor, AI related, is already boosting the economy quite a lot. We've got that information from Bloomberg Economics. It's pushing up GDP in those areas. It may continue to do so. For the months ahead, it looks as though if you want to play in China, you have to know exactly which sectors to be in and which ones to avoid.
OK, you've got to look under the hood. You've got to do your homework on these China stories with the AI catalyst, one of the drivers of some upside. Meanwhile, the Fed, on the macro front, the Fed's Philip Jefferson and Mary Daly signalling yesterday that neither of them have much urgency when it comes to US rate cuts going forward. Let's take a listen.
I continue to see a gradual reduction in the level of monetary policy restraint placed on the economy as we move towards a more neutral stance as the most likely outcome. That said, I do not think we need to be in a hurry to change our stance.
We can take our time to look at what's coming in, both on the economy and any policy changes, make decisions. We don't need to be preemptive.
Fed officials in no rush. What is the pricing? How is this adjusting the pricing from traders as they listen in to these Fed officials and weigh in Trump policy?
A couple of things we're seeing happening here. The yield curve is definitely flattening. We're seeing a lot more demand for long-end treasuries compared to the short end. We're also seeing people dial back on expectations of rate cuts for this year. For now, we only have one interest rate cut fully priced into the market. We've got another half or so cut priced in, but that's gradually being reduced anyway. It's a pretty consistent theme from Fed speakers over the past few weeks. They're getting more and more cautious. They want to see more information. They're a bit concerned. Could be inflationary impact from some of the new measures coming out from the White House administration. At the same time, it may shave longer-term growth off the United States as well. Bloomberg Economics have said could be more than 1% off GDP if tariffs become a big thing for the United States and their counterparts. So there's a lot of uncertainty as to where the direction is going. Typically in a situation like that, central banks like to sit on their hands. They don't need to move one way or the other too decisively. They take their time, in which case we may well see the interest rate cuts being totally priced out of the market. And already some analysts are suggesting the Fed will sit on their hands for the whole year. All of that feeds into the picture of, gives the US dollar a certain amount of support, but at the same time you have to look at what's happening on the other side. Take Japan, for example, where clearly the inflation needle is moving very much in favour of the Bank of Japan. That's why dollar-yen is lower today.
OK, Mark Cranfield from Bloomberg M-Live's team, thank you very much indeed. The market analysis, of course, on those tariffs on China, but also the view around pricing and potential repricing around the Fed that seems to be possibly braced to sit on its hands for a little bit longer than maybe some had expected on that policy. To the geopolitics right now, what could be a dramatic new US intervention in the Middle East. President Donald Trump has proposed taking over the Gaza Strip and assuming responsibility for reconstruction. He says that could turn the war-torn territory into, quote, the Riviera of the Middle East. Trump made the comments during a news conference with Israeli Prime Minister Benjamin Netanyahu.
I do see a long-term ownership position, and I see it bringing great stability to that part of the Middle East and maybe the entire Middle East. And everybody I've spoken to, this was not a decision made lightly. Everybody I've spoken to loves the idea of the United States owning that piece of land, developing and creating thousands of jobs.
He has a different idea, and I think it's worth paying attention to this. We're talking about it. He's exploring it with his people, with his staff. I think it's something that could change history, and it's worthwhile really pursuing this avenue.
Trump also insisted that Egypt and Jordan will take in Palestinians displaced from the Strip. Horizon's Middle East and Africa anchor Jumana Pasechi joins me now from Dubai. Jumana, how viable is this proposal from Trump? He says the US could own Gaza.
Yeah, well, the region is reeling from that press conference that just happened a couple of hours ago. And for several months now, President Trump had sort of floated the possibility of Palestinian displacement. But this is the most explicit comment yet that we've got from him. He is essentially saying that the U.S. need to take ownership of the Gaza Strip. They will be responsible for the reconstruction. They will deal with the unexploded devices within the territory. But then also said that Palestinians should be resettled into neighboring countries, including Egypt and Jordan. And going one step further, saying his plans are to build a, quote, Riviera of the Middle East. And of course, this is at odds with the very reality on the ground, which is Gaza is a strip full of rubble. You have thousands of buildings that were destroyed. You have 1.5 to 2 million people still residing there, hundreds of thousands of families not having homes to return to. So even the Middle East envoy, Steve Witkoff, is casting doubt on the ability to reconstruct Gaza in a 3 to 5 year time horizon. So definitely cast light on the situation of many of those Palestinian residents who don't have anywhere safe to reside. But it risks angering some of the U.S.'s most important allies in the Middle East, because consistently, most countries in the region, in fact, pretty much all of the major players in the region, have said that under no circumstance should there be a forcible displacement of Palestinians. Also very notable that at 5 in the morning, this morning, local time, Saudi Arabia, the Ministry of Foreign Affairs put out a statement saying the kingdom unequivocally rejects any infringement on the legitimate rights of the Palestinian people, and also reiterating that they want to see the establishment of an independent Palestinian state with East Jerusalem as its capital. So very swift reaction coming through from Saudi Arabia, and we're likely to see similar comments come through from other countries as well, not least Egypt and Jordan, who President Trump is pressing to take on more Palestinians. So yes, a really shocking development over here, and many people from the region will say it is a proposal that is dead on arrival, but of course it is something that President Trump has focused on now.
Yeah, a remarkable plan. And the responses, as you say, coming swift. The Saudis up early to respond to that proposal and those comments. Horizon's Middle East and Africa anchor, Jumana Pasechi, with the context and the update. Thank you very much indeed. Switching focus to technology now. A big day in terms of the earnings that came through stateside. Alphabet and AMD both tumbling in extended trading after downbeat earnings. Fourth quarter revenue at Google's parent company, Alphabet, of course, missed estimates after growth in its cloud business slowed. Meanwhile, chipmaker AMD gave a lackluster outlook for AI. It forecast strong double-digit percentage growth in the division, but that disappointed investors who are used to sales doubling at NVIDIA. Matt Bloxham from Bloomberg Intelligence is here with the details. Let's start on whether or not we are starting to see, Matt, then, a turning point for big tech stateside.
Yeah. I think it's probably more a stalling point, to be honest. I mean, there's a lot of unanswered questions out there, but clearly AI is gathering momentum. A lot of these innovations like DeepSeek definitely kind of fuel that fire, if you like. I think one of the big questions, particularly for Google, is whether they can get the return on the enormous investments they're making. So they've guided to $75 billion of capex this year, primarily to support their AI efforts. I'm surprised it was a surprise, but it was a surprise to the market, given that we heard Meta, recently really up their capex number. But, the coming into the numbers, people expected about 60 billion. So it was a big increase. And I think given, all of the competition in AI, people are still questioning, how do you generate incremental revenue from this? Is it just a defensive move to protect your search position? Can you really generate incremental revenue on top of it? And given that you have the weakness in cloud, whereas a lot of the enterprise AI is coming through, those kind of two things kind of go together, and people say, need to go away and do some more calculations.
Well, let's listen into the CEO then of Alphabet responding particularly to the innovation challenge of DeepSeek. Let's listen in. OK, we were hoping to have the sounds of Sundar Pichai of Alphabet, of course. He did comment on DeepSeek in the earnings call. Talk to us about where things stand. So the CapEx spend is there for Alphabet. Part of that CapEx spend is going to go on chips for NVIDIA, partly possibly to AMD as well. And yet there's disappointment around the prospects for AMD. Is NVIDIA just continuing to grow the gap with AMD? Where are we in the catch-up there?
Yeah, I think for sure. And certainly AMD is stumbling a little bit in terms of closing the gap. And there's a huge difference between the two AI chip businesses. $100 billion run rate for NVIDIA, $5 billion for AMD. So, it's a massive gulf there. I mean, it's growing well, like 60-70% growth. But, yeah, I think at least on the call, some sense that there's still some work for them to do to kind of really kind of close that gap. And, overall, the results for AMD were a little bit better. But, you had weakness in that data center business, which is about half their revenue. So there's still a lot of work for them to do. And NVIDIA's got great momentum.
OK. Matt Bloxham, thank you very much indeed. From Bloomberg Intelligence, breaking down the earnings story when it comes to Alphabet and AMD, the maker, of course, of those AI accelerators. The gap continues versus NVIDIA. Coming up, does China's muted response to US tariffs indicate it has more to lose from a trade war? We're going to assess that question and the geopolitical impact of Trump's tariff threats. We'll bring you that conversation coming up next. This is Bloomberg. Welcome back. Happy Wednesday. Chinese markets returning from the Lunar New Year holiday with a cautious start after the first volleys were fired in the emerging trade war between the US and China. Joining us for the market assessment is Xiaolin Chen, Head of International at KraneShares. Xiaolin, thanks for joining us. Always great to get your perspective. What is a 10% tariff on China? What does that mean for China Inc.?
Thank you for having me on your show. Good morning. This is clearly, to our perspective, this is clearly less than what market has been pressing in terms of the percentage of a tariff get announced on 1st of February. Market even a few weeks ago was hoping or was giving the message that this tariff could raise up to 60%. The announcements on 1st of February of 10% tariff rise, and now China is announcing certain sectors that they import, certain products that they import from US. They're going to also introduce different level of tariff, around 10-15% varies from different products. At the end of the day, tariff is a double-edged sword. It's going to hurt on both sides. However, I felt somehow from a few weeks ago to 60% to now only 10%, and also potentially there's a lot of discussion that Xi Jinping and Trump are talking to each other. This led me to believe, what if market is pressing too much on the cosmetics?
OK, interesting. So possibly the market's pricing in too much pessimism. Do you then, Xiaolin, do you position for, given what happened with Mexico and Canada, and as you say, Xi Jinping and President Trump could be on a call anytime in the next few hours, the next few days, do you position for a pullback? Do you position for a reassessment of these tariffs?
I would definitely press in for what is more resilient, what is more rely on domestic consuming sectors that is definitely more resilient to this tariff talk, one. And second is will benefit from the 1.4 billion people who live in China would actually hold their day-to-day life as normal, even if tariff talks going on, or even is pressing slightly better. In our opinion, this year is going to be full of surprises, but surprises on the good upside for a very simple reason. The policy easing is on track, is intact from all the announcements announced by Chinese policymakers as one. Second, if you look, obviously just over Chinese New Year, the markets on mainland just opened. You can see certain sectors, obviously you don't have all the data yet, but certain sectors of the consumer side has shown a great sign of recovery, particularly the program they introduced to encourage trade-in program, certain voucher, certain promotions on certain sectors, even cell phones. Apparently 14 million people shop for cell phones, nearly 90 million cell phones get sold to those people. It's just a small fraction, but at the end of the day, people in China live a normal life. I think the consumer side, particularly with all the policies centered around helping the household, helping on the demand side, you're going to see a good surprise from that side.
So do these trade tensions lead Beijing to go further and faster on stimulus?
I would say so. That's a great question. That's probably one of the reasons why last year in third quarter, they started introducing all these easing policy to focus on domestically as one. Secondly, I think they have been preparing on both hands. One is focusing on domestic. Second, talk more constructively to Trump's administration. If you look at the people around Trump's administration, are all centered around this young entrepreneur, business-oriented, action-oriented person. So hopefully that leads to a very constructive conversation. Tesla itself have 30% revenue from China. If that's the case, Trump's years have music from Elon Musk all the days. So I think for that experience he had experience with China is nothing but positive. Hopefully these two governments can talk constructively, move things more positively. This is not something market has been pressing. Market has pressed in all the negativities and extreme scenario of trade tariffs.
How do you trade, Xiaolin, how do you trade the DeepSeek story for China?
This is really a shock to the market right before the New Year time. I think at the end of the day, it's proof again. You just said in your earlier program, there's a lot of earnings come up for the big tech company today and also in the coming days. There's going to be an interesting, dynamic now with DeepSeek now enter the market with extremely low cost and extremely capable. By the way, myself has downloaded the app. I've tried it out. It seems has all sorts of different dynamic and styles that ChatGPT, for instance, it's yet to be able to very localized. It's Chinese New Year. You look up for your luck for the year. I did that with DeepSeek. It seems very reasonable. Anyway, it's just one of the things I like to do. But I use it, DeepSeek, to see if they really covers all the elements, all the things you look for. Just say, what is your luck in 2025? I have to say it's very deeply oriented to the culture locally. I do think this is actually a positive dynamic for AI market. Yes, it has created volatility. Long term, this is a positive dynamic, particularly for the user side. We, at the end of the day, you and I both are the end user for AI. This is actually a positive.
Chen Xiaolin, Head of International at KraneShares on these markets in China. Pricing in too much negativity. Thank you for your input and your take. There's plenty more coming up. Stay with us. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Asian shares trim gains as Chinese markets return from the Lunar New Year holiday to face a trade war with the world's biggest economy. In Japan, Nikkei reports that Honda and Nissan have dropped their plans for a tie-up. Stormy weather for Google as parent company Alphabet slumps on slowing growth in its cloud division. Chipmaker AMD also slides on a disappointing outlook for data centers. And President Trump proposes the US takes over and rebuilds Gaza, relocating Palestinians to other countries, provoking criticism and concern in the Middle East. We're waiting for lines dropping from Novo Nordisk, of course, the maker of Wegovy and Ozempic. We have some lines crossing right now. We're looking for supply, of course, of Wegovy and Ozempic. We're looking right now at pricing around Honda and Nissan, and that is the automaker story that we are going to get to with the analysis, of course, out of Hong Kong and Danny Lee. But in terms of the numbers dropping from Novo, 2025 operating profit, they're seeing at a constant FX rate of an increase of 19% to 27%. Here's the red head on Novo right now. They see 2025 sales at a constant FX rate increasing 16% to 24% at the top end. The estimates have been for an increase of 19%. So at the top end of that range on 2025 sales outlook, it is a beat coming through from Novo Nordisk at the top end of that range. Other lines coming through, because we know the supply of these obesity drugs is what is crucial for analysts. Obesity care sales in the fourth quarter coming in slightly below the estimates at 21.4 billion Danish kroner, slightly below the estimates. The company says they will continue to focus on commercial execution in 2025. They are putting through a full-year dividend per share of 11.40. That is a little bit below the estimates. Again, in terms of Danish kroner, those are some of the key lines. Wegovy sales in the fourth quarter coming in below the estimates as well. 19.87 billion Danish kroner. The estimates had been for just shy of 20 billion. But again, the redhead is around the sales outlook for 2025 at the top end of the range, coming in comfortably above the estimates. We're going to speak with the Novo Nordisk CEO, Lars Fruergaard Jørgensen, at 9:20 a.m. UK time. So tune in for that interview. Let's get to the auto space then in Japan. The Nikkei reporting that Nissan is to abandon its plans to combine with Honda. Our Asia transport reporter Danny Lee has the details. Danny, where do things stand on this reporting, a significant development in the auto space?
Yeah, Nissan is planning to walk away, or is going to walk away from its plan to combine with Honda here. This would have been a historic deal, frankly, for two Japanese auto majors, would have formed the fourth largest automaker in the world, and would have put a floor under a challenge for Nissan and given the Japanese auto industry at large so much more competitiveness. But why did this happen? Well, that report was according to the Nikkei. And originally, we had the board of Nissan meet this afternoon to decide whether to vote down this deal. And it's just because Nissan and Honda, when they decided to announce 7 weeks ago to the day that they would come together, this was all about Honda rescuing Nissan and giving a lifeline. But they would have been calling all the shots here, appointing the management team, appointing the structure and choosing what to do. However, in recent days and weeks, we've heard that Honda wanted to actually make Nissan a subsidiary, and that was unpalatable for the Nissan board, and that's why they have voted it down. Of course, it's not a confirmation yet. We're waiting to hear from the companies who so far insist that this deal still will go ahead. But the immediate reaction on the shares is that Nissan shares suspended, fell as much as 6% or more, and Honda shares actually soared almost 11% as well.
So to your point, Danny, what is the next route for Nissan? Where do they go from here, given the challenges that company faces?
Yeah, given its financial struggles, given it has been cutting thousands of jobs and looking to downsize in some regard, I think there's a big question on whether it's in control of its own destiny, whether the Japanese government will get involved to say that it really wants to see a deal done, and whether that will be taken out of the hands of the Nissan board, and whether Honda actually comes back again, whether it be on similar terms or on the original terms, something that is going to be a tough test, because aside from all of this M&A, the fact that we have these tariffs that are still yet to be put on between Canada and Mexico. And the reason why this is important is because for Nissan, they are at real risk, because 25% of their US sales, they come from imported cars from Mexico. So they have a lot of exposure. And if these tariffs come through 30 odd days from now, it's a real risk to someone like Nissan who's already struggling. So it remains to be seen what happens next, but whether the Japanese government does get involved again, it will be an interesting test to see of Nissan's resolve.
OK, Danny Lee with the reaction there to a major story in the auto space, of course, with the focus on the challenges for Nissan. Danny, thank you very much indeed. Let's get back to these markets then. The pain point is in tech, given the disappointments around Alphabet and AMD. So we look at US futures kindly pointing lower by 0.5% on the S&P futures. NASDAQ 100 futures currently down by 0.6%. The European session also set to be challenged after the modest gains that came through on European stocks yesterday, gains of around 0.2%. Today, you're looking at losses of 0.4%. Here in the UK, the FTSE 100 set to fall around 25 points. Let's flip the board and have a look cross asset then. We've had a number of Fed officials just building the case that they are very comfortable to be on pause for now as they assess the Trump policy impact. The US 10-year at 4.49 right now, just a move of 1 basis point in yields. The Japanese yen in focus, strength there, look at that, 0.7% of a gain versus the US dollar on stronger wages, building expectations the BOJ has space to go again with another hike, possibly as soon as June. Brent trading at $76 a barrel, down 0.2%, and gold at fresh record highs. A safe haven amid the geopolitical angst, up 0.6% so far in the session, up about 40% in the last 12 months. Talking of geopolitics, President Trump says he will speak to Chinese President Xi Jinping at the appropriate time after Beijing announced its response to US tariffs. It comes after the US president agreed to pause tariffs on Canada and Mexico, after both countries agreed tougher measures to combat migration and drug trafficking. Bloomberg Opinion's Karishma Vaswani says his tactics are seen as bullying and are unlikely to achieve real progress, adding that using tariffs like this will ultimately backfire. It is well worth a read on the Bloomberg terminal and, of course, on Bloomberg.com. Very pleased to say Karishma joins me right now. Karishma, thank you for your time. We enjoyed the piece. We think it's value add for our viewers in terms of the broader context of Trump's policy on tariffs. There are those supporters who might say, look, it is a crude bludgeon to wield, but it is getting results. You look at Canada, you look at Mexico, more deployments on the border, a crackdown on fentanyl. Is the policy not working?
I think that in the short term, I'm the first to admit when I'm wrong. And in the short term, certainly the policy does appear to be working. And, don't forget that the key audience for Donald Trump is the domestic audience. And he's come across as a tough leader, somebody who's tough on crime, tough on drugs. And he can point to the fact that Canada and Mexico have done, in theory, what he wants. But I think the worrying thing about all of this, Tom, is that what does it do to the U.S.'s reputation in the long term? These are two of the most important allies to the United States. Countries in Asia like Japan, South Korea, India, partners and allies that the U.S. under the Biden administration have really built up are sitting around and wondering, well, if Donald Trump can do that to Canada and Mexico, are we next in the firing line? And I think what that does is damage the reputation of the United States as an international business player that knows how to play by the rules, the very rules that in fact were created arguably by the US in a sort of, post-World War II era, the international rules-based order. And I think that is really damaging and concerning in terms of both foreign policy, but also economic policy for the United States.
Yeah, that's a really important context, isn't it? Potentially short-term wins, arguably, but longer-term, the case that this damages Washington's standing internationally. Karishma, given your deep experience in Asia and with that lens on China, how do you think Europe fits into this? Are there going to be those lawmakers and leaders in Europe now reassessing their relationship with Beijing, maybe seeing China as a more constructive player, or is that too much of a stretch?
I think in the early days, it's too much of a stretch simply because, and I don't disagree with that analysis. I don't disagree with the possibility of something like that happening. But I think everybody right now is trying to figure out what their Trump 2.0 playbook is going to look like. And that includes the Chinese. As you were saying in your introduction, that phone call between Xi Jinping and Donald Trump is yet to happen. The Chinese did retaliate, unlike Canada and Mexico. But if you look at that retaliation as well, it wasn't particularly robust. They're not sitting there, to use dating parlance, matching Trump's energy. They're sort of slightly below that. And I think the reason for that is because they're trying to signal as well, look, we're in the market to make a deal, but we want the deal to be on our terms as well. I think in some ways, the might is right sort of framework that Donald Trump deals with is very familiar to the Chinese and the people, the countries rather, I should say, who are used to dealing with China, particularly in this part of the world. And I think that's going to set the tone and tenor for the next 4 years of this administration.
OK, really, really crucial insights. Bloomberg Opinion's Karishma Vaswani. Again, really worth reading that opinion piece and the assessment in terms of the potential longer-term impact when it comes to Washington's diplomacy, international and its relationships within the Asian region. Karishma, thank you. Now, President Trump has said the EU, talking of this relationship, could be his next target for tariffs, but Britain may be spared. That put UK Prime Minister Keir Starmer in a somewhat awkward position as he met EU leaders in Brussels yesterday. Bloomberg's Lizzie Burden joins me now. Lizzie, the key question for Keir Starmer is, can he balance the relationship between the EU and the US?
He's definitely trying to. He was saying at NATO headquarters that he is talking to both sides. He had that dinner with EU leaders. It's the first time since Brexit that a Prime Minister has been to that, a summit dinner. The truth is, though, the closer that Starmer aligns with Europe, the less room for manoeuvre he has to accommodate Trump's trade demands. And yesterday I watched the EU Minister, Nick Thomas-Symonds, make the most bullish case for resetting UK-EU relations. He says that there's going to be pragmatic, ruthless pragmatism, I should say, in the negotiations. And that suggests that Starmer would pick the EU reset over Trump if it came to it, because of course the EU is Britain's largest, nearest trading partner despite Brexit. I would note, however, that only after his dinner in Brussels with EU leaders did he come out and back Denmark on Greenland, and that intervention, as well as its lateness, will surely have been noted by both sides. OK,
talk to us about defence. You've spent time speaking to our Defence Secretary. Defence is a key demand, of course, of Trump. Keir Starmer had a message on defence. The UK spends more on defence than many EU partners. What was his message? How did it go down?
Well, yeah, the exact numbers are important. He echoed the sentiment of Mark Rutte, the NATO Secretary-General, in that you need to spend more to prevent war. But he was notably not giving any confirmation of when the UK is going to spend 2.5% of GDP on defence. Trump's advisers are calling for 3%. Trump's called on NATO allies to spend 5%. And so there's a sense in Brussels that Starmer, according to French officials, is the demandeur, that he is asking for things and yet not committing himself. But when you look at how fiscally squeezed the UK is, it's hard to see when he's going to be able to go full throttle on defence spending. And indeed, tomorrow, when the Bank of England not only makes its decision but updates its forecasts, we'll have more of an idea of how much headroom the Chancellor Rachel Reeves is going to have. OK, and you'll be across that decision for us, of course. Lizzie Burden, thank you very much indeed, our UK correspondent on Keir Starmer and his rapprochement with the EU, but the potential challenge that focus and forms when it comes to our relationship with the US. Coming up to the corporate space and, of course, the maker of Wegovy obesity drugs. Novo Nordisk reporting operating profit a bit ahead of sales. I'm going to break down the numbers from Europe's biggest drug company next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Back to the earnings front, back to the focus on the drug maker that is Novo Nordisk, with lines dropping about an hour ago. The details, of course, and the consequences for the pharma space with the obesity drug maker Novo Nordisk coming through with fourth quarter sales when it comes to Wegovy slightly below the estimates, 19.87 billion Danish kroner. That's below the estimates, but full year sales just ahead of the estimates. So full year across all of their sales platforms, just slightly above the estimates. Interestingly, no additional free cash flow. It says 2025 free cash flow is expected to be around 75 to 85 billion.
What they are not doing is initiating a 2025 buyback because they want to be spending on capex investments. And we know that the supply of those obesity drugs is really crucial. Let's get the latest in terms of the context and the analysis on a stock, of course, that has underperformed, currently down around 26% in the last 12 months. Part of that down to some disappointments around clinical trials for some of their drugs. Let's bring in our Copenhagen Bureau Chief, Sarah Xiaolin. Sarah, what is the assessment in terms of the key lines that jump out to you from Novo's earnings?
Overall, this was a really solid earnings report. This is a record annual profit that they made. So just looking at that number, it's obviously quite impressive. But investors aren't, of course, looking at that. They're looking at the outlook for 2025. And it's a really wide range they've given us. They're saying that sales would increase between 16 and 24%. And that is, yes, it's sort of consensus, because consensus was bang in the middle of that. So it could be lower, it could be higher. And that wide range just raises a lot of questions. Why can't they narrow it down more to that? And of course, we are watching what they're going to do in terms of their pipeline. We've been really looking at this new product, CagriSema. This is supposed to be their new blockbuster. And the trial results we did get at the end of last year were not as good as expected. So now they're saying they're going to launch a new trial and they are going to file for regulatory approval next year. So that's going to be one of the key things to watch for them.
Yeah, and whether or not, of course, it lifts the share price, which has been under pressure, having been such a stellar performer over recent years. How much concern is there in the company ranks around the pressure that the stock is under? Do they look through this? How much determination is there to turn things around when it comes to the valuation of this company?
Well, they would always say that they're not too worried about the share price, right? They don't want to say they're concerned about the future of the company, but those two things go hand in hand. And right now, analysts are pointing out that Novo Nordisk has a problem in terms of the pipeline in coming years. They need to find a product that can replace Wegovy, and CagriSema is seen as this new one that will come out and replace that and help them stay as one of Europe's biggest companies. We don't know any more about CagriSema other than they're going to initiate a new phase 3 trial, which is important because we could get some data that will show that this is maybe indeed going to be the blockbuster drug they were hoping for.
How central is the US market still to this business, and is there continued growth there, Sarah?
Well, they're not really saying much other than we already know. It's their biggest market. They still expect to sell a lot of the products over there. Wegovy, of course, the Ozempic, as it's called in the US. They're not really talking about any of the concerns we have here in Denmark about Trump, trade wars. It's still a bit too early for them. Novo Nordisk is also producing a lot of their products in the US, so they would not be hit by any potential tariffs on this for all of their products. So it won't be this wave of bad news for them if something like that was going to go through. When we're looking at the share price, obviously, they're really building in a lot of expectations for the US. The stock is down 40% from its high last year. So we really need to see some good news coming out of Novo Nordisk to get up to where they were before.
OK, fantastic breakdown of these important earnings coming through from Novo Nordisk and the context as well. Copenhagen Bureau Chief Sarah Xiaolin, thank you very much indeed for a busy day for you and the team. We're going to speak with the CEO of Novo Nordisk, of course, Lars Fruergaard Jørgensen, at 9:20 a.m. UK time. You do not want to miss that interview. Now, to the banking space, we had Credit Agricole. We also had Santander, that Spanish lender, saying it intends to buy back 10 billion euros of its shares over the coming years as it posted another record profit. Spain's biggest bank reported net income of 3.27 billion euros for the fourth quarter, ahead of estimates. Santander has benefited from higher rates, pushing up lending income, but analysts anticipate only a marginal increase in profits this year. We're going to be speaking with the Santander executive chair, Anna Botín, in the next hour. That conversation also well worth your time. So on the banking space and on the pharma space, two key interviews for you today. There's plenty more coming up. I'm going to break down those alphabet numbers for you and give you some context as well around a decision by the US to limit the import of small packages from China and Hong Kong. Broader ramifications, the market has weighed that up as well in the session today as China comes back from its Lunar New Year holiday. That is a beautiful shot of London at 6:51 this morning. Stay with us. This is Bloomberg. Welcome back. So, yes, we have the 10% tariffs on Chinese goods. Yes, China is coming back from the Lunar New Year holiday, and so we assess the mainland markets. And, of course, China has retaliated. But the other key line coming through, which is having an impact certainly on those e-commerce companies, Pinduoduo, Alibaba, and others, is the decision by the Trump administration seemingly to put pressure on the US Postal Service to stop the import of packages under an $800 value coming into the Chinese market into the US market from China and Hong Kong. This has been a key route, a key loophole for many of those e-commerce companies to ship into the US. The US Postal Service now stopping those, suspending them at least temporarily. And this chart just shows the sheer size of this trade. Chinese exports of small packages to the US reaching $22.8 billion. This has been a key route for the likes of Temu, which is PDD, Pinduoduo, Shein, of course, but also Alibaba. So we see the impacts across that. This is something that's being weighed up by the markets as well. Whether or not this will be extended is a key question. But that's just the context in terms of the numbers of packages being sent into the Chinese market, into the US market from China, and it has been that important loophole. Let's get to the Japan story, because we have a story coming through on wages and also a corporate story around Nissan and Honda. So let's start on Japan and wages, because wages in Japan have increased, the highest level since 1997. So traders are now pulling forward bets that the BOJ could go with another hike, possibly as soon as June. Certainly, wage increases has been a key consideration of this Bank of Japan. And now you're seeing wages in terms of cash earnings at 4.8% year on year. The estimates have been for 3.7%. Again, that's the most since 1997. The prior month also revised higher as well. Let's get to Nissan and Honda. Reports from Nikkei that this plan to merge, or as some have characterised it, a rescue of Nissan by Honda, that has now been scrapped. And you've seen Honda's shares rallying more than 8% on that news. Nikkei, which is suspended, currently down around 4.8% before that suspension in share trading of Nissan. That is a story we continue to cover for you, the ramifications for the global auto sector as well. Tech is where the pain point is right now when you look at US futures, and that is centred on Alphabet. Let's flip the board and have a look at this company. Come through with earnings that are disappointed, particularly when it comes to the cloud business, but they are not walking back from their CapEx spend. In fact, they're looking to spend around $75 billion US dollars just this year alone. That is an increase of 43% from 2024. So they continue to spend on CapEx at Alphabet to build out that data center and cloud proposition. Analysts, though, investors starting to get a little bit anxious about that heavy spend. Coming up on the opening trade, we are going to speak with executives from Santander and Crédit Agricole on their latest earnings. Another profit beat for Santander. Crédit Agricole also coming in with a top-line beat, though loan loss provisions increase for that French lender. Joining me tomorrow morning as well, I'm going to speak to some of Germany's most powerful business voices ahead of the election later this month. That is the German election CEO briefing, kicking off Thursday, 9 a.m. London time, 10 a.m. in Frankfurt. We will be speaking to the CEOs of RWE, of Bilfinger and of Commerzbank. So tune in for that conversation. The opening trade, though, is up next. Stay with us. This is Bloomberg.